Are you someone that's afraid to go to your mailbox due to the scary thought of what increase or new bill you have lurking in there? The newest and unexpected hit to our affordability and our way of life, wait for it, sharp increases in monthly mortgage payments. They show up right on your statement. Imagine the shock, the tightening in your chest as you open that envelope or email, only to find the numbers glaring back at you that have unexpectedly soared. Wait a minute. Aren't one of the benefits of homeownership a fixed payment? What happened? Why? For countless individuals, this nightmare has become their unwelcome reality. Homeowners across the nation are waking up to the harsh new day where their monthly mortgage payments have ballooned, and it's not by their own doing. They didn't miss any payments, and they're certainly not in any sort of adjustable interest rate on their mortgage, but it's due to the relentless surge in homeowners insurance premiums and, adding insult to injury, an escrow shortage. If you're not familiar with what an escrow shortage is, let me give you a little education. If you have a mortgage, there is a fairly decent chance that you have what's called an escrow account in which you pay a 1/12 of your insurance and your taxes into every month. When your taxes and your insurance are due, the servicer or the mortgage company pays those taxes, pays that insurance. When you don't have enough money in your escrow account to pay the insurance and or the taxes, the servicer will pay the premium or the tax bill and then increase your monthly payment to make up for the new amount. And again, wait for it, pay back the amount of money that they just fronted you to pay all this. Usually, they'll give you the option to either pay it all back at once, one lump sum, so you're hit with this large unexpected cash call, or pay it back over 12 months, only adding to the increase in your monthly payments. It's as if the very walls that should provide safety and security are now the source of stress and uncertainty. This terror is compounded by the fact that it's not an isolated incident, but part of a larger, more sinister pattern of cost of living increases that have been tightening their grip around our throats for years. Every corner of our lives, from the gas pump to the grocery store, have seen a relentless rise in prices, squeezing us until the American dream is more like a nightmare. The question then arises, how did we get here? How have the safeguards of our homes, aka the insurance companies, turned against us, pushing many to the brink? The struggle is real for so many, so let's try to understand what's happening and causing these increases. Please do me a favor and subscribe to the channel. I hope you're getting an opportunity to learn a few things and getting an education. And please do me a favor, don't hesitate to comment below. I'm happy to help answer any questions that you may have. Enjoy the rest. This is an important discussion on a pressing issue many homeowners are facing today: the unexpected rise in mortgage payments. This isn't just about numbers on a bill, it's about understanding the factors that are driving up the cost of homeownership. Let's look into the reasons behind these increases and what you can do about it. But first, let's tackle the significant rise in homeowners insurance premiums. A combination of factors is at play here, a chief among them being inflation and the increased frequency of natural disasters. Look, I'm not talking about global warming or anything along those lines. I'm talking about there have been hurricanes, tornadoes, floods, fires, etc., and more claims have been filed due to these. Both have a direct impact on insurance costs, driving up premiums even higher for those who have never even filed a claim. You're sharing the cost of the burden on this. Many carriers are pulling out of states altogether due to the increased risk of natural disasters. Florida, Louisiana, California, just to name a couple. What's interesting, our carriers are pulling out of states with less opportunity or risk for major natural disasters. They're pulling out altogether. They're limiting their risk exposure by simply lowering the sheer number of policies written, which ultimately does not help the consumer, and it certainly does not help lower premiums. Construction costs are also seeing a sharp increase, with materials like lumber, copper, concrete are all becoming or have become more expensive. This means that any claim made today will cost significantly more to settle than it would have just a few years ago, contributing to higher premiums for all. During the COVID years, many carriers froze their premiums in an effort to help so many that lost their jobs or were furloughed and really weren't receiving any sort of income. The concept to help the homeowners save was admirable, but not very well thought out. The cost of materials like lumber and copper are traded on the open market. Those prices don't care whether you lost your job or not. They don't care if you've been furloughed. Additionally, the claims did not stop, so insurance companies lost outrageous amounts of money during this period. We have also developed this thought or this concept or this learned behavior, whatever you want to call it, that homeowners insurance is used for maintenance of our home. Insurance was not designed just to replace a roof when you decided it needed one. It was designed to be there in case of an emergency, in case of a disastrous expense or an unexpected major expense. But we've adopted this mentality that, well, we pay for it, so we should just be able to use it at any time. That's not the original design, and due to this, so many have seen increases in their annual premiums. As mentioned before, many homeowners pay their insurance and property taxes through an escrow account managed by their mortgage company or their mortgage servicer. When insurance premiums or property taxes rise, the escrow account requires more funds to cover these expenses, leading to an increase in your overall monthly mortgage payment. Property taxes are another significant factor affecting your mortgage payment. They're determined by your local governments and can fluctuate based on changes in property values and municipal budget needs. Recently, many areas across the country have experienced notable increases in their property taxes, further pushing up their mortgage payments. We all love that our homes have increased in value, but unless your state has a freeze on property taxes, your taxes are assessed based on value. When they come around and they determine the value of your property each year, that's how they determine it. Values have gone up and will continue to rise in many regions, and taxes will go hand in hand. And in states where you're seeing a property tax decrease, I'm willing to bet that you don't see as significant of a decrease that puts any sort of dent in that monthly mortgage payment. While these increases may feel out of your control, there are steps you can take. Number one, shop around for homeowners insurance. Annually, you should be able to determine and ensure that you're getting the best rate, but also pay close attention and make certain that you're not underinsured. Right now, with home values that have increased so significantly, many of you are not carrying the proper coverage. Consider appealing your property tax assessment if you believe it's too high. Most counties make it pretty easy for you to do. Make sure you stay informed about changes in your local tax rates and insurance market trends. I also hear, just hear me out for a second, I hear that if you vote in your municipal elections, it's helpful too. That can help determine what your tax rates are. Just because those parks are beautiful doesn't mean you need to be paying additional property taxes for it. It's just a thought. I'm all for parks, but I also am all for lower taxes. Understanding these factors is the first step towards managing the cost of homeownership effectively. By staying informed and proactive, you can navigate the challenges and ensure your home remains the sanctuary it's meant to be. That's it for me today. Thank you for watching. For more insights into homeownership and managing your mortgage expenses, subscribe to our channel. Together, we can keep your dream of homeownership secure and sustainable. My name is Darren Hunter, and that's another guaranteed video with another guaranteed message. Have a great day.